This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell more than 1.5% on Monday as investors once again focused on concerns U.S. tariffs on its trading partners will create economic headwinds that will reduce fuel demand growth. Brent crude futures slipped $1.10, or 1.6%, to $66.86 a barrel at 0255 GMT after closing up 3.2% on Thursday. U.S. West Texas Intermediate crude was at $63.57 a barrel, down $1.11, or 1.7%, after settling up 3.54% in the previous session. The broader trend remains tilted to the downside, as investors may struggle to find conviction in an improving supply-demand outlook, especially amid the drag from tariffs on global growth and rising supplies from OPEC+, said IG market strategist Yip Jun-rong.
Russia's economy ministry has cut its forecast for the average price of Brent crude in 2025 by nearly 17% from what it saw the price would be this year in its September calculations, Interfax news agency reported early on Monday. The ministry envisages in its baseline scenario of economic forecasts for 2025 that the average price for Brent will be at $68 per barrel, down from the $81.07 per barrel it assumed in its September forecasts, Interfax reported. The ministry sees the price for Urals, Russia's main blend, at $56 per barrel, against the $69.07 per barrel Russia has based its 2025 budget on.
Moving on to the top news in the energy sector.
The European Union is looking at ways to make it easier for U.S. gas exports to comply with its methane emissions rules, as the bloc attempts to avert a trade war with U.S. President Donald Trump, three sources familiar with the matter told Reuters. The European Commission is working on its offer for trade negotiations with the United States, to attempt to avoid Trump's planned tariffs, with both sides signaling that energy could form part of a broader trade deal. Trump has said several times the EU should buy more American oil and gas to lower its trade surplus with the United States. European Commission President Ursula von der Leyen has said the EU could increase US LNG purchases, as the bloc seeks to quit Russian gas by 2027.
China's fuel oil imports in March fell 29% from February and slid 30% from the same period last year, customs data showed on Sunday. Imports totaled 1.38 million metric tons for March, or about 283,212 barrels per day. BPD, based on customs data, bringing the total in the first quarter to 5.22 million tons, a fall of 6.3% year-on-year. The fuel oil imports typically end up in refineries as a feedstock to produce higher-value oil products. Next, we have the top news in metal markets. Gold scaled a record peak on Monday, spurred by concerns over global economic growth amid the U.S.-Sino trade war, while a weaker dollar further boosted the rally. Spot gold advanced 1.4% to $3,373.70 an ounce as of 0432 GMT after hitting a record high of $3,385.08 earlier in the session. U.S. gold futures firmed 1.8% to $3,386.50. The dollar index hit a three-year low, making gold more attractive for other currency holders.
China's coal imports from Russia rose 6% in March from the same month last year to 7.33 million metric tons, data from the General Administration of Customs showed on Sunday, despite logistical constraints and Western sanctions. Coal imports from China's largest supplier Indonesia declined 9% to 17.96 million tons, after Indonesia started using its government-set benchmark coal price as the floor price for transactions from March 1. China's overall coal imports fell 6% in March, dragged down by high port inventories and weak domestic demand that have pushed spot prices to four-year lows.
We will now look at the top news in the agricultural sector.
Soybeans climbed to a two-month high on Monday and corn inched higher, supported by expectations of trade talks between Washington and Beijing, although gains were limited as market participants remained cautious. Wheat prices eased, but losses were limited by concerns over dryness curbing U.S. yields. There is some hope that U.S. and China might start trade negotiations, but the price move is limited for now, said one grains trader in Singapore.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.